Oh, sorry about that. Thank you, everyone, for attending this governance meeting on Wednesday, the 3rd of August. Got an echo. My name's Councillor Deborah Platt, and I'm the chair of the committee, and Councillor Mark Clifford, who's the vice chair. Please note that this meeting is being live streamed on YouTube. When you want to speak, please raise your hand, and when I invite you to speak, please turn on your microphone. And don't forget to turn it off when you're finished. If the technology fails, I'll adjourn the meeting and we'll try to resolve the issue. If not, we'll arrange a new date. Please can everyone ensure their phones are off? Me included. Got that one. And we're not expecting any fire drills, so please exit the building if you hear any fire alarms. Have we got any apologies?
I've received no apologies.
No? We've got a full house anyway, haven't we? Minutes of the meeting from Wednesday, the 1st of June, Governance Committee, and the recommendation is that we approve these minutes. Is everybody okay with the minutes, or does any questions arising from them? Okay, can I have a proposer? Okay, Councillor France and Councillor Clifford. And I take that as being approved, yeah? Brilliant. Does anybody have any declarations of interest? Just reminded you can raise a declaration at any time, if not now. Okay. Item 3 is the External Audit Progress Report and Sector Update. And I see Georgia's here, or Matt Derrick it says. So are you taking that one, Georgia? Okay, over to you.
Thank you very much. So this is our regular progress report, just to update you on where we are in terms of the audit for the Council's financial statements. So this is looking at the financial statements for 21-22. So we've completed our planning and interim work. So if you go to agenda page 118, that's where I'm starting, which is page 4 of our report. So we've completed our planning and interim work. And we are now just awaiting the financial statements, which I understand we'll receive in the next week or so to commence the financial statements audit. So we're liaising with Louise and her team around that to make sure that we have an efficient and smooth audit process for the year. And the deadline that those accounts have to be audited and signed off by is the 30th of November. Just set out the value for money work there under the code. Again, the deadline for that is actually extended as it was last year. So it needs to be done and signed off within 3 months of us giving the audit opinion, but we are actually aiming to actually deliver that around the same time as the financial statements this year. The following page just sets out some other areas of work that we complete, for example, the housing benefit claim, and also we continue to meet with key officers of the council to update our knowledge and to discuss any emerging developments and issues. The following page just sets out a timetable for the deliverables. We issued the plan earlier this year to the committee, and now obviously we're just going to go through the audit the accounts, and then we'll deliver our audit findings report opinion and our auditor's annual report. And then later in the year, that's subsidy claim certification. The remainder of the report is just a sector update, so just kind of various reports that might be of interest to members. So I'm happy to take any questions on that report.
Thanks, Georges. Any questions from anyone? Sam? Councillor Chapman?
Thank you, Chair. On our page, it's actually 136 on the download I have, which is page 10 of the actual document itself. There's an improvement recommendation with regard to financial sustainability.
That's the following report.
Oh, sorry,
the progress report, I think.
I've flicked through too quickly. Well, now you can be expectant for next.
Consider that warning, Georgia, yeah. Anybody else, any questions on this paper? No? So on that one, we're just, are we just noting that one? Yeah. So we just note that one. Thank you. Just nip into item 4. I'm sure we've got questions on this one. The External Audit Annual Report 2021, pages 127 to 152. Are we back over to Georgia? Yep.
Thank you. So this is our auditor's annual report, and so this is a new report under the revised Code of Audit Practice that was issued by the National Audit Office for audit years beginning 2021 onwards. So I guess one of the key things to highlight at the moment from this report, that it is a retrospective look at the arrangements that were in place in 2021 for the council. So things may have moved on since kind of the arrangements were looked at, and as I say, we're looking backwards really, and we will update that work as part of our 21-22 audit. So if I take you to agenda page 129, which is page 3 of the report, which is the executive summary. So that sets out the kind of high-level results, if you like, of the kind of different areas that we look at. So previously, before the new Code of Audit Practice, it was, I guess, a lighter touch when we looked at value for money, and we would quite often concentrate, given kind of current times that we're in, on the financial position of the council. This is a more kind of deep look across all different areas of arrangements, so financial sustainability, governance and improving economy efficiency and effectiveness, as is set out on the right-hand side of that page. So the little table just kind of gives the very high-level results in terms of no significant weaknesses identified in any of those areas, but in financial sustainability and governance there are some improvement recommendations. Then as you go through the report, it gives kind of the detail of the work that we've done. It is fairly detailed, so rather than kind of go through it page by page, I thought I would talk through the improvement recommendations and then take any questions on the body and detail of the report, if that's okay. So there's a couple of improvement recommendations through the report, the first one being on agenda page 135, and that comes under financial sustainability. So we just made, so I guess also it would be helpful to kind of set out the kind of recommendations we could make, which are in one of the appendices, but I guess the highest level, the kind of most serious level is a statutory recommendation. And that's where kind of the significant weakness that perhaps is pervasive and ongoing from year to year. We can make a key recommendation where we've identified significant weaknesses in arrangements, or we can make improvement recommendations, which are more kind of like, this is what good practice would be, this is what we would recommend for the council. So the recommendations within the report are improvement recommendations, so more around the good practice, you know, this is the things you could do to kind of really kind of shore up the arrangements that you have in place. So the first one on page 135 is around really just when kind of formal reporting to members around kind of finance and budgets where there's kind of underlying assumptions, we would just recommend that there was potentially some sensitivity analysis or scenario planning, just to give members a bit more information on what might happen or what might the financial impact be if kind of those underlying assumptions changed. And you can see kind of we've set out the impact and our judgment and also management's response to that recommendation. The following page recommends that, you know, potentially that kind of financial reporting could make a kind of distinction between discretionary and non-discretionary information, financial information and spending and budgets. So that's really kind of around, obviously the council has statutory things that it must deliver, and then it has potentially discretionary services as well. And again, it's just really to help with that informed decision making, to see, you know, and also as well, I guess, for the public as well, to see what kind of falls within each of those kind of areas. And then the other recommendation is on page 40 of the agenda, which is kind of under the governance area. So members may recall that, again, looking back to 2021, internal audit weren't able to issue a full opinion partly because of kind of COVID and the impact on the internal audit function, and like, you know, that impacted on the capacity of internal audit. They were pulled onto kind of other areas, as you would expect, dealing with kind of the COVID requirements that the council was under. So, you know, although they were kind of able to give opinion on certain arrangements, they couldn't give the full opinion. So really this is around just keeping really a watching brief on internal audit, making sure that, you know, it is staffed correctly and to capacity, so that they are able to carry out a full programme of work and give you the assurance that you need across all areas. Again, so the rest of the kind of report is the detail. There's no other kind of improvement recommendations or recommendations that we've made through that. So happy to take any questions.
Thanks, Georgia. You might have headed that one off. Sam?
Sorry, yeah, yes, please. Thank you, Chair. So, two questions for you, really. On agenda page 136, the improvement recommendation on financial sustainability, which is about the distinction between discretionary and non-discretionary spend. Obviously, we've got a management comment there, and I wondered how that response compared to your experience of practice elsewhere.
So, yeah, I mean, it is fairly common. I mean, I have made this recommendation across a number of different bodies because it's not, I guess, standard practice to make that distinction. As I say, these are good practice recommendations, and you quite often, it's not, I do acknowledge it's not always very straightforward to distinguish all discretionary and non-discretionary spending. I do acknowledge that kind of it might not be a straightforward exercise. For us, it's about kind of transparency and enabling kind of the public to see how decisions are made and why decisions are made, it feeds into that. So, but I think, management have undertaken to do it where they are able to do it. So, I mean, what we will do is we'll have a look at that, see the changes that have been put into place from our recommendation and report back on that in the, the next year's report. I think what we don't want to do, these are good practice recommendations, what we don't want to do is make something onerous, for the council, or kind of make them kind of put a lot of extra time into something. We need to balance the time and the benefits. So I think that management have responded positively in saying that they will do what they can, and then we'll see going forward what they are able to do.
Okay, thank you, Chair. Sorry, I indicated I had a second question, which is about page 138. On the top right there of the section on governance on major capital projects, the report says the process was not sufficiently robust. This is with regard to the acquisition of Logistics House. The process was not sufficiently robust and the risks not fully considered in line with the Council's own risk management framework for a transaction of this value. What, in your view, was missing?
So this was reported on in the value for money report for 1920 for the council. Under the previous arrangements, we gave a binary, so qualified or not qualified. So it was qualified partly because of kind of this issue. So my understanding is that there should have been a more robust business plan in place in terms of kind of that transaction and the forward-looking kind of how it would work and kind of the kind of benefits and risks to the council, and kind of under the council's own risk management strategy, kind of all the kind of criteria under that you would expect for a large capital programme wasn't fully followed at that time. So that is, again, that's from 1920 and was previously reported. So again, though that report is obviously available for members on the kind of council website if you want to go back and see kind of more of the detail around it. But it was really about having a robust business plan in place to enable kind of, again, that informed decision making by members at the time.
Thanks, Sam. Thanks, Georgia. Is there any other questions? Neville, you look like you were just about to ask one then.
No. Body language can be quite
Okay, so item 4, we are noting item 4, yeah? So item 5 is the Treasury Management Outturn Report 21-22, Quarter 1 Monitoring Report 22-23, pages 9 to 30, and it's Steve. Hi, Steve.
Thank you, Chair. Okay, so this report summarises our Treasury Management activity over the 12 months of 21-22 and also an update for the first 3 months of this financial year. Last year was very much a continuation of the year before in that we had quite high cash balances as a result of the COVID funds that were washing through the council. And similarly, we were only able to achieve a low yield on our investments because of the prevailing interest rates. The headline figures to the report are set out at sections 7 to 11. But I'll quickly run through the main messages. So first of all, in terms of investments, our overall approach is always security, liquidity, yield, in that order. So security, it's public money, it's got to be placed in a safe place. Liquidity, we need to be able to access those funds when we need them to support council services. And then finally, yield, the amount of interest we generate. It's obviously important, but it never comes at the expense of those first two. So as I said, we did continue to get a lot of COVID funding during 21-22, quite often at short notice as well. It would just sometimes land And equally, we also had to get it out quite quickly, particularly in respect of business grants. There was quite a tight timescale to turn those round. So we had lots of money coming in, lots going out, and we couldn't really place that money anywhere for any periods of time and get much interest on it because of that. We had an average daily balance of 9.3 million, so that is down on the previous year when we had 13, but it's still more than we would expect to see because of the COVID funds washing through. We got a yield of 0.09%, and that was against our target of 0.1%, so just marginally short of the target, but actually it was the same figure for the previous year as well. One thing we have done in previous years is lend money to other councils, but that wasn't possible because every council was in this position. They'd received the COVID funds and they didn't need to borrow, so we really were limited where we could place the money. In cash terms, we got a return of £8,800, and that compares to £13,000 the previous year. Moving on to capital financing then. So we completed a capital programme of nearly £24 million. Notable schemes within there. So we had the Alkaline scheme, 6 million, Whittle surgery, 2 million, Tatton, 9 million, and the Westway sports facilities, 1 million. Overall, we had a financing requirement of 14.7 million. Some of that we were able to fund internally from the resources that we had, but we did take on an additional loan of £10 million towards the end of the year. Moving on then to Q1 of this financial year, interest rates are now increasing. Forecasts suggest that this will continue probably till about December 23, peaking around the 2.753% level. That's the view of our Treasury brokers, Link Asset Services. Clearly, it's only a forecast, and we're some way off that date yet, so it's quite a dynamic situation. Average daily cash balance is down slightly in the first 3 months at 9 million, but the yield is up because rates are rising, so we've got 0.58% in the first 3 months, and that's a cash return of 13,700. So in the first 3 months of this year, we've got more than we got all of last year, which is encouraging. We've not entered into any new borrowing in 22-23. The last loan taken out was the 10 million at the back end of last year. I did receive a question in terms of how does Brexit impact upon our Treasury Management activity. So I've pulled together some commentary which I'll just present to you. So obviously with Brexit, the biggest issue was the uncertainty that came with it, and that affected us locally, nationally, and across Europe really. There's some certainty now to a degree in that the trade agreement has been signed, but as you'll see in the report, our Treasury advisors have said there are still a lot of outstanding issues that require resolution. That's in Appendix H. It's the third bullet point down that they've referred to there. So the economic impact is still uncertain and very difficult to assess actually, because there are a number of parallel factors in play. So we've got global economies recovering from the pandemic. We've got the situation in Ukraine, and then there's Brexit as well. And trying to attribute what is as a result of what is very difficult. What we can talk about is the local impact on our Treasury activity. So interest rates, investment returns, borrowing rates are all beyond our control, if we're being honest. All we can do is continually monitor the situation and engage experts such as Link to advise us and guide us with the decisions that we make. Whatever factors are in play and whatever the interest rates are, I'll come back to say security, liquidity, yield is our overall approach. We'll always undertake business cases in respect of investment decisions, and we'll always stick to our own internal rules, if you like, which are our counterparty limits and our prudential indicators. and we will always keep the members involved as well, keep you informed. You know, we bring 3 main reports in respect to Treasury Management: the budget, the mid-year review and the outturn, but we also reference it in the quarterly budget monitoring reports that we bring as well. Just to conclude then, Chair, so we haven't breached any counterparty limits or prudential indicators last year or this year, and members are asked to note the reports, but I will take any questions.
Thanks, Steve. Has anybody got any questions for Steve on the report? You've had yours. Yeah, the question for Brexit was marked. Right. Okay. So, sorry. We're noting item 5. So, item 6 is the draft core financial statements 21-22, page 31 onwards, and it's Tony Furby.
Thank you, Chair. Well, the report is it's in what I'm sure is a familiar format. It is principally about the process for the approval of the statement of accounts, and I should mention that, given that it's mostly about the process, my apologies that there is a reference to the audit being completed by the end of September, and as Georgia has already mentioned, that is in fact November. So it's not that we're trying to hurry the auditors away or anything like that. Though I'm sure, yes, I'm sure everyone agrees. You know, if we can be that bit ahead of that, then even so much the better. The document that's attached is it's not the full draft accounts. The full draft is now in a very advanced state of preparation, and again, as Georgia has already mentioned, the expectation is that will be completed and with the auditors really within a matter of days now. What we do have is all of the core statements and the supporting notes, and most significantly of the supporting notes, the one that I always hark back to, the expenditure and funding analysis that is at note 1. So to take a quick look at the main figures within all of that, if we just go to page 38, and there is the comprehensive income and expenditure statement. And if we look there at the figure for surplus or deficit on the provision of services, well, that looks quite healthy, a surplus of a little over £3.5 million. But then, of course, I have to add the familiar but, because that figure is after adding in various transactions for revaluations of fixed assets, for pensions, collection fund surpluses and deficits, accumulated absences, all things which are not counted against the bottom line and the council tax. So yes, these are the ones that we faithfully put them in, and then once we've put them in, we take them out again. And so for that, if we do go to the expenditure and funding analysis, which is on page 42, and there you'll see that in arriving at 3.5 million, we actually had income, I'll put the income in inverted commas, of 4.579 million from those factors which are then adjusted back out. So if we look then at the left-hand column on the right-hand side, we finished up with a deficit of £1.043 million, giving us reserves, general fund reserves, at the end of the year of 15.945 million. Now, for more detail on those reserves, we need note 11, where they're all set out in turn. That's on page 48. And members will see there, I will draw attention to the next to last of the earmarked reserves, the Business Rates Grants Exceptional Payments Reserve. Now, this is the one, again, it's all back to COVID funding and people being granted additional discounts against their business rates. Our business rates goes down, but our income from Section 31 grants from the government goes up. And the effect of this is income gets displaced between years. So this is the reserve that we're using to smooth all of that out. And that has actually gone down during the year, as expected, because, of course, COVID reliefs in 21-22, not as high as they were in 2021. So that reserve alone is actually down by just over 1.4 million. So if you're looking for why has it gone down by over £1 million, well, there is the answer in itself. So actually the underlying position, that aside, we're actually a little bit ahead, nearly £400,000 ahead. One other significant figure to point to, one I always know that it always attracts attention. On the balance sheet on page 40, towards in amongst the long-term liabilities, the pensions deficit. Now, the pensions deficit has actually gone down from 55.5 million down to just under 44. And once again, it is for a familiar reason, because if we just move 2 pages further up, back to the CIES, down towards the bottom right-hand corner, you'll see a figure of a surplus of 14.5 million from the remeasurement of the pension fund assets. And yes, you can glance across to the corresponding figure for 2021 and see that we have a picture which, you know, I'm sure we've seen before. It was substantially up last year and it's substantially down again this year. And please don't ask me to predict what happen in 22-23. So that's just a quick tour around the core statements. Yes, the report is mostly about the process. We are very, very nearly there with the draft statement. And just to re-emphasise, you know, the approval will come at the meeting later this year. And for today, there is nothing actually requiring approval.
Thanks, Tony. Have any members got any questions of Tony and the reports? No? All quiet, Tony? Oh, sorry. Jump in.
48. It's, as you've highlighted, obviously our reserves in the business grants are down by 1.4 million. The reserves are still needed, obviously, for ongoing grants and allowances, are they?
Yeah, what the reserve is for is, we finish up with extra income from the Section 31 grant in 1 year. But the other side of that coin is, because the extra reliefs have been granted, there's a deficit accumulating in the collection fund. And then the next year, we have to fund our share of that deficit. So then we take the money from here to cover that off.
Thank you. I just wondered why that was doing what it was for. Thank you.
Any more questions? No. Okay, so we're jumping to item 7, which is Steve again, sit for Resilience Index 2021 on pages 51 onwards. Steve?
Okay, thank you, Chair. So this report summarises an annual index that is compiled by CIPFA, who are the public sector accounting body. Its purpose is to provide an assurance of financial health. CIPFA produced the report by collating various statutory returns that councils submit during the course of the year, and then they put them into what they call family groups. So what they do, they look at authorities that are similar in terms of social, demographic, economic factors, and they bundle them up into groups of about 12 authorities. You'll see from the reports that the group has changed slightly, so some have come in, some have gone out, but the ones that are in there are supposed to be like authorities, so fit for comparison. I'd always give a health warning with this sort of exercise, because we do know that when councils submit the statutory returns, there are variances in the way, for example, how overheads might be apportioned. So it's never quite like for like comparison. So consistency can be an issue, but certainly if we're comparing year on year with ourselves, we can get a view of our direction of travel. And also it's quite fortunate that South Ribble are included in the comparator group, because we do know those figures are comparable, because it's the same team producing them in the shared finance service. I'll quickly run through what the indicators are saying. So the first one is about reserve sustainability. Now these are scaled to a factor, given a mark out of 100 basically, and the council scores 100, as do the others, so it's got the maximum score there. The next graph looks at the level of reserves. So Charlie's showing a strong performance there. Effectively what it's saying is the council has got 96.5% of its annual spend in reserves. So, you know, if it had to, highly unlikely, but if it had to, it could survive for 12 months without any incoming resources. That puts us 139th best in the country, so roughly midway, and 10th in Lancashire. The third graph looks at the change in reserves, and basically all councils there are showing that they have experienced an increase, and that again is back to the flow of COVID funds. Many were received in 2021, distributed in 21-22, so you get a spike in the reserves there. The next graph is interest payable. So Charlie is towards the top end of this group. By no means an outlier, I would stress. And I think what this is saying is it's indicative of the investment that's taken place in the borough. So big schemes such as Logistics House, Market Walk, Strawberry Fields, all of which generate healthy income streams for the council that support the revenue budget. But you know, they were funded from borrowing, and that's why the interest figures are where they are. The next one looks at external debt. So for the same reasons, you know, Charlie's roughly mid-table. But, you know, it does confirm that despite all the investment that has taken place, you know, Charlie isn't an outlier by any means. It is sitting in the middle of the group. Fees and charges. So the council scores quite highly on this one. And that again comes back to the investment that's been made. It is generating income now for the council. The final graph looks at, the penultimate graph looks at council tax. So this isn't the cash level of council tax per household. This is the overall yield, the total sum that's coming into the council. And what that's showing is that the council's got a strong council tax base. And then the final graph looks at business rates growth. So again, mid-table, demonstrating healthy growth. You know, Charlie's clearly a place where businesses want to locate and want to grow. What we are going to do is step up our monitoring of business rates growth, because these are big numbers supporting the annual budget. So we are going to do more analysis of, you know, which are our top 10 businesses in the borough, for example, which businesses might be coming into the borough, opening up, developing. So we're going to get more ahead of the estimates, really, so we can feed those into our budget forecasts going forward. There's always a so what question with this analysis. You know, it looks very good, lots of graphs, but what does it really tell us? Well, it does give us an independent assurance that the council is in a strong place. It highlights the benefits that have arisen from the investment that's taken place in the borough. I think what it's important we do now is that we keep refreshing these reports. You know, we've got 2 years data there, but if we keep doing it, we'll get more of a weight of evidence. And finally, obviously we've got colleagues from external audit in the room. I think this sort of stuff is useful evidence that we can provide to the external auditors to support the value for money judgments. So members are just asked to note the report, but I will take any questions. Thank you.
Excellent, thanks Steve. First one from Councillor Clifford.
Thank you, Chair.
Call you Councillor Mark.
Thank you for that report. All very good news in there. And it's just a query, because obviously Safe Ribble are our neighbours here. So under the Chart 8, which is the business rates growth above baseline, we're to the middle of the graph there, and Safe Ribble are number 1 there. Just an explanation on that, please, for the committee. Thank you.
Certainly, thank you. So the graphs, I mean, these are always a snapshot at a point in time. So for the year 2021, South Ribble were top of the group in terms of business rates growth. That was a particularly good year for South Ribble in that they had a number of big assessments that came on stream. So there was a Tesco supermarket, an Aldi supermarket, and there was also some work on one of the trading estates and at the hospital, which all boosted the business rates for that particular year. Yeah.
Thanks Steve. Any more questions? Okay, is it okay if we note that report then? Yep. So I've got item 9, which is the RIPA application update from the monitoring officer, and we've got Chris Moister with us.
Thank you, Chair. Yeah, I can confirm there weren't any RIPA updates. Sorry, Chair, I think you skipped item 8, which was the strategic risk review.
Thanks for that, Chris. I will return now to item 8, seeing as I've missed it. Sorry, Rebecca. So the strategic risk review, pages 65 to 110, and we've got Rebecca with us.
Thanks very much, Chair. I thought I got away with it there. Nearly. Okay, so this report provides an annual update on the Council's strategic risk register, which identifies any key risks to the organisation and the delivery of our services. So this has been reviewed by the senior management team to consider any changes to the risk scores and new actions to help mitigate risks. So just to take members through the report, we start there with the highest scoring risks and then changes to risk scores and ends with a kind of summary table which sets out each of the risks, including existing control measures, risk scores and actions to kind of mitigate any further risk. The full risk register can be seen at Appendix A, which includes risk owners and other actions. So starting with the highest scoring risks, which are outlined at paragraph 14 onwards, these reflect the kind of funding uncertainty which has been exacerbated by the current national economic context and rising inflation, and then risks around resourcing and capacity, which is due to the kind of national job market and skills shortages across the country, and then the continued risk around ICT, business continuity and cybersecurity, which is kind of due to the potential impact on service delivery and reputational damage. So strong control measures and actions are in place to mitigate against these risks, including the new people strategy, the Council's governance framework and budget setting and monitoring processes. You can see at paragraph 16, the report highlights the risk changes since the last reporting of the risk register. So out of 19, 3 have decreased and 4 have been identified as increasing. So for the 3 that have decreased, this is due to closer working relationships across partners, how we've adapted to the new ways of working through the new digital and workplace strategies, and also the reduced risk from the COVID-19 pandemic as well. To go through the 4 that have increased, so the first is R3, which reflects the continued uncertainty around funding streams from central government, and also the national context as well, which is being closely monitored and managed through the budget planning process. R5, which reflects the risk around capacity and skills, which is reflective of the wider local government job market and changes to the job market following COVID-19. This is being mitigated by the review of management capacity to ensure we've got good levels of capacity at leadership level, and then also the new people strategy, which includes specialist recruitment campaigns with recruitment specialists for technical roles where we might be struggling to recruit. Work for Us Wednesdays, which are better communication of jobs and how to work for us, and then apprentice and graduate programme to help us grow our own in the more hard to recruit areas. R10, which reflects the new technology that we're introducing to support our internal ways of working. And that has been impacted and changed by COVID with the drive to be more agile and more efficient. So this means that we have kind of new technology that we have to implement. So that's why this risk remains high as well. This is being mitigated by new dedicated resource to drive this programme forward around the ICT plan. And then finally, R11, which reflects national trends in relation to staff satisfaction. This is as a result of the pandemic, ongoing fatigue, and alongside capacity challenges in relation to the current job market. There has also been a period of organisational change. Whilst this provides benefits to staff, it also has led to kind of periods of change and uncertainty to staff. So there are several programmes of work being delivered to help us manage this, which includes close monitoring of well-being and morale through pulse surveys, and the new people strategy, which will deliver opportunities for staff engagement and looking at reward and recognition. So I think that takes us through the entire report, but this is just to note, but if there's any questions from members, I will more than welcome them.
Thank you, Rebecca. Has anybody got any questions about the report or of Rebecca? Councillor Clifford?
Thank you, Chair. Just one there. It's good to see that things, mitigation work is being done, but the new people strategy, what's the time frame for that, the timeline on that one?
Yeah, so we've currently just drafted the strategy and we're planning to launch that in September. So we've currently put together proposals for the launch initiatives, which are around the graduate and apprentice programme, some development days, which will enable staff to sort of have more dedicated time to work on their kind of development and skills. So they're happening between sort of September and October, and then there's an action plan that sits alongside it, which is over the next 12 months.
Thank you. Any other questions for Rebecca or the report? No. Members are asked to note the strategic risks, controls in place and actions planned to further mitigate these strategic risks as set out in the report. Okay, lovely. I think we'll skip item 9. Item 10, Governance Committee Work Programme. So the work programme is starting on page 111. Have anybody got any questions on that? Gotta find it. No, all quiet, must be no questions. There we go. Found it. Okay, item 11. I've got no items, so I'll close the meeting. Thank you everyone for attending.